You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it is Monday. It is noon Central. It is 1 p.m. Eastern. Yes, it is time to kick off our broadcast week here on the Options Insider Radio Network with the Option Block. My name is Mark Longo. I will be your host, your tour guide, your maitre d' for this 1 hour long journey through the world of options. And we did it last week. It was kind of fun. So maybe we'll do it again this week just to get our blood pumping, get things moving a little bit here, kick off the week in style. We're going to go back to our 80s theme guessing game. Going to play a fun little tune, get the blood pumping, then we'll see who can guess it. These early ones, kind of easy, but they're also kind of fun. They get the blood pumping a little bit, which is kind of fun. All right, here we go then. Copyright law be damned.
And the masters of the universe. I am Adam, Prince of Eternia and defender of the secrets of Castle Grayskull. This is Cringer, my fearless friend. Fabulous secret powers were revealed to me the day I held aloft my magic sword and said, "By the power of Grayskull."
All right. That's enough of that. Mr. Meatball, we gave Uncle Mike the courtesy of going first last week. I believe he got Thundercats on the first try. So now I will extend the same courtesy to you. I will admit I did kind of create this game with you in mind because I know you like a good 80s tune and not. So, welcome back to the show, Mr. Greasy Meatball, Mark Sebastian from OptionPit.com. B, can you name that very difficult to decipher theme song, sir?
You're kidding, right? I mean, I had Castle Grayskull and Snake Mountain. I probably had almost every single He-Man toy in the world when I was a kid. Tila, Evelyn, Man-at-Arms, Many Faces, Ram Man. I had regular He-Man, Battle Armor He-Man, and Thunder Punch He-Man. I had Cyclonus, Battle Cat, Panther, Skeletor, Merman, Triclops.
Triclops, a good one. I may have him glancing down at me somewhere here in the studio right now, I do believe.
Yep. That is one that was easily my favorite show when I was 5 years old. Easily my favorite show. It was then eventually eclipsed by G.I. Joe.
Those were two neck-and-neck ones back in the day. Thundercats, Uncle Mike said his was last week, was Thundercats. But He-Man definitely wanted Transformers. Also a good one from back in the day. Maybe we'll have to work, spoiler alert, maybe we'll have to work that one into the mix as well. So, yes, Mr. Meatball got that one as well. So now it's tied 1-1, the Option Pit boys and Uncle Mike. Uncle Mike, sir, you didn't get to guess first this time. Another easy one this week, but another fun one to get the blood pumping. Uncle Mike, sir. Of course, Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the program. Do you have any fond 80s-oriented He-Man memories as well, sir?
No, I remember running home from school and just trying to make sure I got to watch the show on time. I used to love it. I had a lot of the same toys that Mark just mentioned. He-Man was definitely one of my favorites. Just to mess with me, sometimes my family would say Hail Skeletor and make me cry. That's what my older brother used to do to me. But nonetheless, now that when I became bigger than him, we took care of that issue, let's just say. So anyway, I love the Masters of the Universe. It was a great show. Many fond memories playing with the toys and watching the cartoons.
Good stuff. Folks who are fans of this brand, it sounds like it's making a comeback here. Mattel, or I think Hasbro, putting a lot of money into that brand. It's actually back on whatever store shelves do exist now. They are actually new He-Man toys on the shelves in I think Kevin Smith's working on a new show coming out soon. So maybe the old school Motu making a bit of a comeback as we make our own comeback right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading. You know what else is making a comeback? Not that it ever left, but it's making a comeback again, is this market. Another kickoff to the week, another explosion of green on the screen. Most of the major indices just feeling the love, feeling the gusto, firmly up in the green. The Dow leading the charge today, up almost a full percent, about 0.95%. S&P up about 0.75%, and the NASDAQ up about 0.2%. So NASDAQ taking a rear back seat to the Dow out there, our old friend. Small caps, a.k.a. let's look at the Russell 2000 IWM lens at least, up about 0.5%. So also, small caps taking a rear back seat today as well. Kind of one of those weird topsy-turvy days. Our old friend VIX Cash coming into Showtime was a little bit north of 22.5. Now it's at about exactly 22.5. That puts it down almost half a point from where it was this time last show. VVIX coming into Showtime was at about a little bit north of 109, almost 109.25. Puts it down about 6.3 or so from last show. And then we have VXX, 24.5, puts it down a little more than half a point, about 0.6 of a point. What's driving all this green on the screen today? Well, kind of pick your poison. What's driving this out there today? We got some talk about fast passing. Easy for me to say. Fast pass. That's a Disney thing. Fast tracking. Plasma treatments out there here in the U.S. Of course, that's a little bit of a divisive thing, but nonetheless, that's getting a little bit of love. Maybe that thought to fast track some of those treatments could be doing it. Also, some hope maybe of de-escalating what's going on out there with China, or maybe just pick another day that ends in Y and the markets are in the green. Pick your poison out there. Let's go around the horn again. Let's go the opposite of the way we came. Let's go back out to Uncle Mike, sir. Uncle Mike, sir, in addition to your love of all things Masters of the Universe, what is lighting up your tape this week, sir?
This is going to be tough, but it's true. Never before in the history of the entire stock market has there ever been a better time to sell than right now. We're at new all-time highs today in the S&P 500, and so who'd have thunk it about 3 or 4 months ago? It's kind of crazy with where we're at. Does that mean now is a great time to sell? Well, that, of course, is up to the individual investor's opinion, but just going by the factual numbers, we're at all-time highs again. I think what's driving a lot of this is the news yesterday when the press conference that they may be fast-tracking vaccines. So I guess the CDC was against Trump the day before. Now they're for him. I don't know. I guess, and I want to just say this for either politician. I guess kind of my feelings on it is expecting a politician to save you is the equivalent of crapping your pants and then changing your shirt. That's kind of my feeling upon the whole thing right now. But, with that, there's a lot of good things going on right now. Apple's over the 500 mark. I was actually up at 515 for a little bit today, which is crazy when you think about the move with which it's had. It's been a very violently powerful move to the upside. And then just with everything going on, markets continue to go higher. I think this is just also consolidation with the FANGs making up, and a few other select stocks, of course, making up bigger and bigger portions of our economy, and that's what is a lot of what's driving our market. Small business, a lot of small businesses throughout the country, they are struggling, of course, because if you can't open, you can't have success. But I think that in the major market theme of things, what's happening right now is just bigger businesses continue to get bigger, which is ultimately good for the market, or that's what it's showing at this point in time right now. VIX still remains in the low 20s, so there is some premium to be sold out there. Still, you're not going to get the same premium you would have gotten a few months back, but you can still sell some significant premium. I'm leaning more towards the premium selling side still in my trading strategies, with managed risk, of course. But for the time being, markets continue to go up. We have a little bit of positive news, but I will say this again, beware of a pullback. Don't know when it's coming, don't know where it's coming, don't know how or why it's coming. But it will be coming. That is one thing for sure. Do I think we should continue to take advantage of this bull market? Absolutely. I know I am. But just be ready, because the large upside does begat large pullbacks oftentimes in the marketplace.
Uncle Mike, you degenerate premium seller, you. Way. Nickel puts all day long. That's Uncle Mike's trademark. Okay. All right. Well, speaking of things that are crazy, I kind of buried the lead at the top of the show. We also have, kicking off the week here, double canes, double hurricanes. Whoever thought of such a thing? And yet that's kind of the year we're living in, listeners. 2022 hurricanes threatening to race into the Gulf at the same time. Pretty much never really happened before. Some folks joking, will they form together like Voltron, another 80s show, to make a super cane, or one of them kind of devour the other, or something else happens. So far, one's there in the Gulf. I think the other one's hot on its heels. So, yes, that's just the year we're living in. This next pandemic, all sorts of other fun, civil unrest, and now double canes to add to everyone's list of fun. Mr. Meatball, sir, regale us with some of your own fun. What is lighting up your tape out there today?
Yeah, I mean, Apple feels a little bit blow off the top high at this point. It feels like post-split, there could be some bag holders on that one. I just don't think that the move with it's made, it's all multiple expansion. It's kind of nuts. And, when you have a stock up $10 and the vol up 7 points, that should tell you something. I commented last week that I thought Apple vol was too cheap. I was correct. We're seeing continued strength in names like Berkshire Hathaway, right, which has a significant Apple holding as well. The industrials look stronger today. Today's market, which is different than some of the other ones, is a lot more broad. We rallied last week in the S&P 500 with more decliners than advancers almost all week. The breadth of the market has stunk, and that is what I think is the most concerning thing about this rally, is that, we do have a new all-time high in the S&P, and we don't have many stocks that are hitting all-time highs. We only have a few. So the rally's been relatively narrow, led by the mega caps, and that trade is concerningly crowded at this point, and that's something that I am watching closely and intently. We are seeing a little bit of rotation, and I think an interesting thing is that when Apple splits, which is the 28th, is that it splits on Thursday, I think, or is it Friday?
Uncle Mike, you're a resident Apple head. When's the exact split, sir?
Off the top of my head, I do not know. One of those 2 days, I believe.
So it will go from the biggest component of the Dow Jones Industrial Average to the 16th biggest overnight without losing anything. And so we've already seen the Dow kind of decouple from the S&P 500, which is strange. And this could be, I think, a catalyst for a little bit of outperformance out of the industrials relative to the S&P and the NASDAQ 100, which are both really heavy in about 5 names. And that's been what's driven us higher and, again, concerns me.
Well, you've been beating that crowded trade drum for a while, and you're right, it is. I mean, when you only have a handful of names kind of driving all of this, and, we said it before here on this show, a lot of the names we profiled here in the Odd Block and other segments seem to have peaked back on June 8th and have been kind of listless, if not trending downward. over the course of the past month and change, couple of months out here. So, yeah, it is an interesting kind of mixed, somewhat bifurcated market once you get beyond the big mega fangs and all the other fun stuff out there. Let's see what other fun stuff is lighting up our tapes out here today. Let's start in the major indices. Kind of a light one to kick off the week. Another week will huge green and start off the week. That's kind of old hat. It's blasé now. The market's shrugging that off. VIX only doing 130,000 contracts as of a few minutes ago, listeners. The ADV is back up over 300,000, but just ever so slightly. It's about 302 right now. By at not even 2.25, about 2.2 million contracts. The ADV well shy of 5 million. It's about 3.5 million out there right now. The S at 655,000 contracts. So that's actually decent paper for a product that has become kind of a shadow of itself out there these days. 884,000 contracts is the ADV out there right now. The Q, 758, so that one's looking pretty robust. Closing in on their ADV, which is just a tick under 1 million contracts out there. And let's look at IWM for our Russell flavor of the week here. 175,000 contracts. The ADV, nearly 500,000, so IWM lagging a little bit there as well. Moving on out to our top 10 most active. You can probably guess what's dominating our list yet again today, listeners. But we'll start at the bottom. Cost you 196,000 contracts to break into the top 10 today, listeners. That's pretty robust. That's roughly 40,000, 50,000 more than we see on a usual quiet day. That gets you to Amazon. Number 9, we got AMD 205. So number 9, we're already over 200,000. That's kind of interesting. Number 8, Microsoft 226. Our symbol buddies are back for 7 and 6 now. Number 7, Boeing, a friend across the street here, 246. Number 6, Bank of America, hot on its heels, 253 over there. Number 5, NIO, back to Chinese electric cars, 271. Number 4, Facebook. It's kind of like a greatest hits here in the top 10 today. Number 4, Facebook, 328,000. Number 3, American Airlines, 351. That's kind of the one maybe also ran in that list. Not always in the top 10 these days, but today it is 351,000 contracts. Number 2, you guessed it, Tesla, 419,000. That means Apple, number 1, 1.3 million. The post-split announcement love just continues out there. It's like they just wave a magic wand on these names. We're going to split. Hey, we got to buy it. It's going to be cheaper down the road, but let's drive it up even more expensive in the interim. It's like it's a magic. If there was some pixie dust out there, this is clearly it. Apple up nearly over 9 handles today, about 910 or so, up nearly 2% to 506.55. Mr. Meatball, do you remember? It doesn't seem like that long ago, but we were talking on the show here about being reticent to sell I think it was July, so maybe it was 2 years ago. Maybe I don't think it was last July. It seems like it was just yesterday. The July about 150 puts, and we actually polled our audience, and they were all very tentative at selling those. I think you even came out here on the show and said, hey, if it breaks 150 to the downside, something is structurally different. Something has structurally changed in Apple. So how the worm has turned out there in not that long of a time where people were terrified, a large percentage of you were terrified to sell those puts, to now the stock is over the 500 handle. Do you remember that? Do you remember that discussion, Mr. Meatball? It doesn't seem like that was that long ago.
Oh, yeah. It's amazing, right? People want to buy it for 500. They didn't want to buy it for 150. It's amazing the way price can determine sentiment. I think that personally, if I was I'm hearing from some of the big holders that they're starting to. The reason why the vol is up is there is a lot of hedging activity going on in Apple right now, a lot, and that's because I think a lot of these owners are kind of terrified of the price action that has just happened. It is, pretty fascinating. So, all of the paper today is I'm looking at the stats right now. It has traded over 1 million contracts already, and there was a huge buyer like the 495 puts. The 450 puts have traded. There was some call sellers. There's the September 4th 500 puts were bought. The 485 puts were bought on September 25th. You have a lot of upside call buyers. So when you see put buyers and upside call buyers, that's a very good sign that things may be getting a little bit out of hand on a name, and people are taking their stock selling it and buying calls so they don't miss out on the upside. Just incredible volume. So it's already eclipsed its average daily volume, and we're only halfway through the day. So, crazily, think about this. On Friday, 250,000 of the 500 calls expiring on Friday traded. This is just crazy volume in Apple right now. And, you gotta ask yourself, okay, what in the world is going on here? Interestingly, there's about 300,000 puts trading right now. 63% of them have been bought on the offer, just straight up bought, because that is what is going on with Apple right now. Just absolutely bananas.
Absolutely bananas in that fruit company out there. Looking at this chart here, it hit a closing low of 224 and change in the middle of March Madness, listeners, and it's like an intraday low of about 201, so even lower. Even that long ago, actually about exactly a month ago, end of July 23rd, it was 371. So obviously this post-split, just not even post-split announcement has just been this explosion of upside out here. So not that long ago, it was trading less than half. Of course, not quite the horror story of upside that Tesla is, but still an amazing run here for a company. I mean, we didn't even talk last week how it crossed the 2T threshold. Just a lot of madness on display out here. Let's see what else is lighting up our tapes out here this week. There are a lot of earnings. If you're done with, let's say, the massive FANG names, you want to get out some other names out there. There's a few out there popping off. Today we got Palo Alto Networks. Tomorrow we got Best Buy, Medtronic out in the medical device space, Hormel for all you hot dog and associated food lovers, Salesforce, Intuit, Nordstrom. Quite a diverse day tomorrow. Even JM Smucker out there. Wednesday we got Dick's and Box. Thursday, Uncle Mike, your favorite day of the cycle, Dollar Tree and Dollar General. Uncle Mike can go get all of his fashion accessories now. TD Ameritrade and HP and Ulta Beauty and Dell. And then Friday, out to Big Lots. Of course, we got the new and improved, hotly updated, fresh, hot off the presses earnings move and earnings move results for you. You can see them all for yourself, dozens, if not hundreds of tickers for you guys to analyze at your leisure, completely for free. TheOptionsInsider.com, courtesy of our friends in Orat's Land. See what we got here for this new report just coming in as of showtime here. Best Buy, they're on the 25th before the bell. They were at 114 as of this report. They were pricing in 784. In the past, they moved 754. So those straddle has kind of lined up a little bit more with what they've moved in the past. Intuit, 322 and a quarter. They were pricing in 1677. That's almost double what they've moved in the past. In the past, they moved $8.70. So interesting bit of juice out there. Again, it passed its prologue this cycle and last cycle. That's going to be a bloodbath for buyers. But hey, you never know. Urban Outfitters, they're on the 25th after the bell, 1885. They're pricing in $1.66, a little bit rich. In the past, they moved about $1.20. Let's see, Dick's Sporting Goods, there we go, a little frog in the throat. Dick's Sporting Goods here, 46 and a quarter. They're pricing in $4.32. In the past, they moved about $4.02. So a little bit extra juice, but not a ton. Box, they're on the 26th after the bell, 1776, a great year. That's also what they were trading at as of this report. They were pricing in $1.53. In the past, they've moved about $1.25. Dollar Tree and Dollar General, the hot dollar store action Uncle Mike loves so much. Let's go to Dollar General first. $1.98, almost $1.99. They're pricing in $10.65. That's actually light. In the past, they've moved about $11.25. Dollar Tree, they were at almost $100 even as of this report. They were pricing in $6.73. Also light. $8.28 is what they've moved in the past. So light vol across the board in the dollar store space. That's interesting. Dell out here, 60 and a half. They're pricing in $4.22. In the past, they moved $1.70. So Dell pricing in some juice, pricing in some movement. Earnings season report also available for you there, updated on the site there, listeners. And again, kind of a sea of red out there right now. So interesting stuff afoot. Speaking of interesting stuff afoot, let's see what kind of stuff we found for you today. It is time to get weird, time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we get whimsical. This first name certainly covers a lot of those out there. It's certainly whimsical, a little weird and a little wild out there today, too. This is L Brands, Mr. Meatball's favorite brand out there. They own Victoria's Secret for maybe a little bit of the wild and the weird. And also Bath and Body Works, kind of a tale of two different tapes out there. We'll get to that in a second. L Brands, ticker symbol LB. Trading right now right around 29.5, off about half a buck or nearly 2%. This is the name has had an interesting year. A year ago was trading about 17 bucks, so well shy of where it is right now. Then it kind of drifted right around that level until looks like beginning of the year, till January or so. Then it started ticking up, got up to about 20. Then it ticked up to about looks like 25 and change. And then it kind of peaked out around there right in early March. We all know what happened after that. And it sold off pretty hard down to 9 and change closing, and it looks like intraday got down to about $8 even. And it bounced hard off that $8 level. Then it had a lot of peaks and troughs, rallied, sold off. Got up to, 15 bucks almost in April 9th. Then a week and change or so later, actually a couple weeks later, April 24th, it was trading 10 bucks again. So it kind of had fits and starts like a lot of names did. And then it peaked out. Guess when it peaked out, listeners? Guess what the near-term peak was? June 8th, of course, that day we've been analyzing a lot here on the show at 1931, and then it turned around again pretty hard. It got down to 13 and change. Then it kind of languished there for a while. Then it started turning again, and then we saw, looks like they had earnings back a little bit ago. And actually, this is even before then. They started turning before then because they gapped up hard on July 29th from 19 bucks up to about 26. So a good day for them out there. Then they kind of been in this mid to high 20s range ever since. And then let's see, they also had some, looks like a surprise profit that they posted on their earnings that were 4 days ago. So not today. So today's paper is not earnings related. They had, again, kind of talking about that bifurcated brand there because the L brands, the lingerie, the weird stuff, not exactly lighting up the tape out there. I think they were down like about 40% in sales there. But the Bath and Body Works, a.k.a. the soaps, were blowing the doors off. So that lifted them to a nice surprise profit out there. So the stock's been looking a little bit robust out there as well. Our friends at Orats, they also run some unusual activity. They picked this one up on their scanners as well. They said L Brands was their second highest volume to their 20-day average out there today at about 3.3 times it. They had clocked about 45,000 options trading coming into Showtime versus about 13,500 for the average. Calls leading the dance, 44,000 to about 1,000 puts. So let's find what our Eye of Sauron found. Something similar out there today. It was in the call side of the fence. It was the SEP 33s. These things were on fire pretty much all day long out here. If you're talking about 45,000 options trading out there, a good chunk of that were these SEP 33s. The big print that caught our eye was almost 23,000 of the SEP 33 calls going up for 31 cents. This was below the bid on the NOM. They were bid for 32 cents out there. Like I said, their earnings, the next cycle is not until November. It's not a straight-up earnings play. These are SEP. These are expiring on the 4th, actually. So these are in the weekly. So these are very near-term contracts out here. Then we saw a lot more printing after that in small lots. Small relative. These are still decent-sized lots. So it's not 23,000. We saw 1,500 going up for, it's like splits, 45 cents and change through the offer. Another 1,200 or so, 39.3 cents right near the offer as well. Another 1,000 lots, a bunch of them. Total of nearly 50,000 going up out there coming into Showtime. Maybe more have printed since then. But somebody's got a huge axe to grind here, Mr. Meatball, on this 33 strike. And the prints are all over the place. They're through the bid. They're through the offer. It's a weird one, to say the least. The one sizable print, which nearly half of the paper was through the bid, but it was late, and that always makes things look a little bit weird. So what are your thoughts out here on L Brands? I know this is the name you and your wife like to watch quite a bit. What are your thoughts on this call PALOOZA? You think folks are harvesting a little bit of the old risk premium? Are they swinging for the fences? What are your thoughts on this call explosion here in L brand, sir?
I'm watching them print, and a lot of these are being bought. So I don't know exactly what is going on here, but this is absolutely crazy volume for L brands. It normally trades, about 10,000 contracts a day, 48,000 in this one print. That is nuts. And, it's going to eclipse 50,000 on that strike. I think they're being bought. And, you got to wonder why. Is there some sort of LBO for LB coming up? What exactly is happening here? I think that because the vol is up, I can tell you how I know that they're being bought. The vol is up about 5 points. So they are buying these. And I don't really know why, but it is fascinating. It is a fascinating print.
This one might have to get into rotation there in the Trading Legion, sir. But you're right. This is the funky one. We're going to come back to this one very soon because this is very near dated paper, listeners, expiring on the 4th. There has been some talk about them, I think, spinning off Bath & Body Works. So maybe someone's got the inside skinny on that. If that's the case, this is such a near dated paper. This would be so obvious. This would be kind of akin to what the CEO tried to get away with over there in Kodak. Don't let Elizabeth Warren see this if some news comes out in the next couple of days out here. But this is size paper. I'm with you. It does, even though that one weird print kind of throws it off that it's aggressively below the bid. It's kind of hard to read into the bids and offers on these listeners when there's so much paper going up all over the place out there, and the prints are so weird that it does. That's why things like the ancillary details we always talk about, the context, vol, and other things, do tend to feed into that equation. Just has the whiff. This kind of size paper like this, usually not aggressive overriding. Usually it is this kind of someone swinging for the fences and doing it pretty near term. So we'll be coming back to this one pretty soon. Maybe we'll find out what this guy was all fired up about as we move on into our next name. This is, I believe, a newcomer to the odd block. This is Omnicom Group, ticker symbol OMC. Not OMG, that would be cool, but OMC. Makes more sense, though. This is an American global media marketing and corporate communications company out of NYC, trading 54.05 right now, up about $1.50 or nearly 3%. This has been another one, kind of a bit of a weird chart. A year ago, it was trading about 75.5, looking good, kind of drifted up to a little bit north of 80. They kind of hung out in that mid-70s to low 80s range for a better part of the rest of the year beginning of this year until we all know what happened in February. Listen, they started turning around. They got down to, looks like about 46 and change in the middle of the madness in March, and they kind of bounced and bounced and bounced and bounced. And they also had their near-term peak. Just take a guess. Take a random guess, listeners, when this name topped out. Oh, if you said June 8th, you were correct out there as well. That date has a huge gravitational pull on that date for a lot of the smaller names we profile, particularly in a segment like this. About $64, $63.90, and then it kind of hasn't looked back since. It's kind of fallen off down to 54 and change and been bouncing in this 54 level pretty much ever since, which is where we find it today, up $1.50, so a good little run here, but still right around $54 again. So an interesting name, another one that kind of topped out recently on June 8th. Let's see what's going on out here. This name also on fire today from an overall size perspective, at least. This is not a name that does a lot of paper, as you can imagine, listeners, doing 13,163 of the SEP 47 half puts going up for 32 cents, so aggressively through the bid on this one. These were 35 cents at 50. That's not exactly surprising in a name like this. I'm guessing, going out on a limb and say that 35-cent bid wasn't good for 13,000. They had to go a little bit through that to get this done. This was over there on the ARCA. There are earnings, but they are after this expiration. They're on October 13th. So, Mr. Meatball, looks like we got a straight-up line in the sand here in a traditional monthly, not going into the crazy weeklies, for 32 cents, 47.5. Looking at this chart, that's not a bad line in the sand to draw if you are going to draw it. It's a little bit north of the 52-week low, which was intraday. They never really closed there. So, interesting. Someone taking 32 cents off the table 13,000 times. Is that your takeaway as well, sir?
That's what it appears to be. Someone just looking to create a little income, and if the stock gets there, they'll take delivery. It's a pretty cut and dry case of that, and I don't think it's a terrible idea.
Cut and dry case indeed. Mr. Meatball, you picked a good day to come on the show. You get He-Man, Master of the Universe, kick things off. Now you're getting some names you like here in the odd block. First, you get your beloved L brands. All we're missing is Darden restaurants, and you'd be a very, very happy camper. But we're going to close it out here with Gap. Ticker symbol GPS. No, not Garmin. That'd be a cool ticker for Garmin, but no, it's Gap, GPS. Trading right now $15.32, up nearly $1 or a little over 6% today. So a good little run today for Gap. Let's see what's been up for Gap, even though I'm sure Mr. Meatball can probably recite this chart by heart. A year ago, it was trading 16 and change. They topped out at 19 and change on September 12th, and they kind of never really got back to that level again. They were hovering 18 and change back in mid-February. Then we all know what happened. They sold off pretty hard. They got down to 5 1/4, listeners. And this was a little bit later than the rest of the market. This was April 2nd. So rough time for them. Obviously, malls closing, in-person traffic closing. Not a lot of people going to their Gap stores. So Gap feeling it pretty hard out there. Then they started to recover. Within a few weeks or so, they were trading up to 9 and change again. And then they sold off again down to 6 and change. And they peaked out again. They topped out. I don't even have to look at the chart, listeners, to know when this near-term apex was. Yes, it was June 8th. And it was $13.65. And then they sold off hard again, down to about 10 and change. And they kind of languished there for a while. It's only recently, in the last couple of weeks, that they've managed to break out of the shadow of that June 8th high and get up to where they are right now. 15.30 and change or so. So let's see what our Eye of Sauron found out here. A little bit smaller than some of our other prints out here, but for Gap, pretty sizable. It was the OC 18s, Mr. Meatball, going up 5,465 times. Pretty much a penny off of the offer. Going up here for 88 cents here, a penny off the offer, 5,500 times or so. Let's see when the earnings are. There are earnings included in this, but it's not exactly an earnings trade because the earnings are on the 27th, so they're going well beyond the earnings here into October. Mr. Meatball, it's like kind of an old school odd block trade. Someone maybe feeling a little bit of love here for Gap and expressing it with a sizable call buy. Is that your takeaway as well, sir? And what are your thoughts? I know you watch Gap. What are your thoughts on this trade?
You know, that is what it looks like, and they have earnings coming up. I'll be very interested to see whether these pan out because the Gap has not performed very well over the last couple of years. It's had a really nice run since bottoming out. I mean, it was, man, this thing got down to $5 in April. Back to 15. One has to wonder whether it's a stockholder selling their stock and buying calls just to make sure. Because I personally don't love Gap very much, and I think it'll be very interesting to see how these play out.
You'll be pleased to know we'll be coming back to this one. We'll be coming back to all three of these here on the show in a little bit, listen to see how they play off. I'm very interested in digging a little bit more into what's going on out there in L brands as well. That's got the whiff of something intriguing about it. But you know what else is intriguing? It's the strategy block. So let's get to it.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, it's that time of the week. It's Monday. It's Uncle Mike time. You know, Uncle Mike, maybe a lot of our listeners are sitting there. They're sitting on some longer-term portfolios. Maybe they got some gains. Maybe they're looking at Tesla 2000. Maybe they're looking at Apple 500 and saying, I like this, but I'm a little bit skittish at these lofty levels. Or let's look at the straight-up S&P. You can make the same argument for that as well. So if folks are sitting there, they're buying holders, they're long-term with Uncle Mike, but they're getting a little bit skittish. What do you have in store for them this week?
Okay, so a couple things. First off, just to revisit my indicator, and this I'm just kind of saying this tongue-in-cheek. It's not a serious indicator, but just to revisit the indicators that I'm talking about, how when people who aren't typically in the market are typically talking about the markets, it's usually not a good sign. Well, two associates, let's say, or two classmates of the graduate student that I was telling you about before, just recently were buying Apple on Robinhood, on their Robinhood account. So I think that's a pretty, I think it was on Friday, even from what I heard. So there's another indicator that we might be in a market top that the most in-debt people on the planet, college students, if they're buying Apple on their Robinhood accounts, that's probably not a good sign. But anyway, I want to tell a story about the importance of how hedging needs to have some spot within your portfolio. So let's go back a few months. And what I'm hearing also a lot of right now in the marketplace is, why don't we just buy and hold? Because the market always comes back. And factually speaking, it always has, because we're at all-time highs right now. But let me tell you about a situation that I ran into a few months ago. This was from a prospect that I had who was thinking about becoming a client, but he had to kind of put a lot of stuff on hold because we were talking slightly before COVID. And then when everything shut down, he kind of had to go into survival mode. So it was an 80-year-old couple, approximately, and they had a majority of their net worth in stocks. Now, they were all good, high-quality blue-chip stocks. They also owned real estate. They owned their own houses. They had two homes. They had a shopping center that they owned, and no mortgage, no debt whatsoever, and then a portfolio full of stocks. And so their thought was, okay, we were just talking. We never got through the initial stages of what we were going to do, and we still might become, they still might become a client, who knows. But what happened to them was, as soon as COVID hit, of course, stocks went down. And so with that, you're thinking, okay, well, buy and hold, stocks are always going to come back. Well, here was the problem in their case. The markets went down, and then their renters couldn't pay their rent because of the fact that, well, there's no business anymore. Now, they did some, and I'm not sure if they're not clients, so I'm not sure if they got some PPP relief or anything along those lines. Maybe they did, maybe they didn't. I'm not sure. But here's the problem with doing just a buy and hold portfolio. I'm not against it. I believe in it as one strategy, as I've said on this show before. But when you do just that, here's what happens. They had to dip into their savings in order to survive, because they weren't getting rental income. Now, granted, they have plenty of money. They'll be fine with where they are, but they had to take a hit for it. Now, you're thinking, okay, well, that's the money. That's what it's there for. Okay, so they took a hit to kind of survive from selling some of their stocks, but a couple things happened. One, they had to sell the stocks that they've held for a long, long time, and they're going to have to pay capital gains on those. Second thing that happened is that the markets came back, and so they essentially sold the low when they had to do so. So with that is one area with which I want to just explain how having just buy and hold can be flawed. You might say, well, but Mike, what about diversification? What if they had some money in bonds? Okay, good question. Well, at that same time, if you're looking at treasury bonds, well, they were in pretty good shape. If you're looking at corporates, all I'd like to do is just show you a chart of LQD. LQD went down very significantly during that time, and LQD is a corporate bond ETF, and that was representative of what a lot of corporate bonds did. Now, yes, it did come back when the government started saying, hey, we're going to start buying corporate bonds now. But if they had to get out at that situation, then with that, they could have been in a bad spot. So what does all this mean? Does this mean you should never do buy and hold and just sell puts every day? No, I'm not trying to say that at all. I believe there is a spot for buy and hold. But this is an area to where options can definitely help you. Now, let's say that you're in some type of a simulated index concept as to what I've been in, with a portion of it. Don't get me wrong. I had buy and hold stocks go down too. I'm trying to be upfront with our audience. But let's say that they had a portion of their portfolio in the simulated index concept. Well, with that, they wouldn't have gotten hit that hard on that much of a downturn, and perhaps they could have sold some of their holdings that they would have had in the boring section of the portfolio. That's one thing that could have happened. Or let's say that they were in our hedged strategic night fund. If that were the case, then perhaps at the bottom, if they were really buy and hold type people, they could have maybe taken profits on some of the puts or put spreads, as we did, and then instead of reinvesting the money back in the market at that time, maybe use that to survive off of. Would it have been perfect? No, but that's how we work with people, is when they have life situations like that, we help them make those decisions and give them advice on that. So where I'm going with this is that if you are in a buy and hold portfolio and that's all you're doing, that's your only exposure, I think you need to expand what you're doing a little bit. Do I think you need to get rid of buy and hold? Is buy and hold totally flawed? Is it awful, horrible, evil, and bad? No, not at all. You can't argue with it. We're at all-time highs right now. However, you can run into situations to where it's not going to be the ideal thing for you. And that's where I feel the most ingenious product that's ever been invented in the history of all money, that is the option, can really help you in a lot of ways. I've built my career on doing options and long-term portfolios. And so does that mean everyone needs to have all of what I do? No, I'm not trying to say that. But what would make sense to do is that you can use options as a tool to prevent a bad situation like those prospects that I ran into happened to them a few months ago. And so are there other situations? Yes. Are there other ways you can use options as a tool? Absolutely. So I'd encourage you, especially now when we are at all-time highs, to consider possibly using some type of hedge, some type of option strategy, just to kind of protect some of the gains. Because if you run into a situation or you're risking a situation similar to what those prospects were in, there's options that can help you in times like that. And that's what I'd encourage you to take a look at. And that is my strategy block for today.
You heard it here first. Uncle Mike says Warren Buffett is an idiot. Now let's see what you guys have on your brains as we keep on moving right on into a really quick mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's see how many of you guys we can squeeze in here really quickly. Speaking of squeezing in, we had Jeremy Schaller try to squeeze in on vol views on Friday from the live chat. We thought he was talking about VIX. Turns out he was talking about NVDA. That's why it's important to tell us what underlying you're talking about, listeners. He says, I got calls through September 1st. Do I hold until next Friday or just dump now? I figure hype for the event keeps building on NVIDIA. I have one call at 464, one call at 485, and one call at 500 even. I'm already up nearly 5,000, so it might just be worth running with my gains. But I'm trying to get 25,000 for a down payment on an investment property, so sort of incentivized to keep going. Well, first off, don't let that gauge your risk tolerance and your risk sentiment here, Jeremy. If you're trying to turn this into a crazy swing for the fences, that's where things go bad, and that's where you can end up losing this $5,000 that you're up already. That's a pretty good run there. Let's see. Speaking of good runs, NVIDIA has been on one. A year ago was trading 165.5. Right now, listeners, it's at 508.43. So even the 500 calls Jeremy has are pretty juicy right now, I think, to use the technical term. I'm a little bit leery. Mr. Meatball, I'm sure you get questions like this a lot over there in the land of the pits. Are you as leery as I am that he's going to keep running with this one, even though he's already up $5,000, because he's trying to squeeze it into a 5X winner and make $25,000 so he can buy an investment property, sir?
You got to take profits when you're doing that well on a trade. Generally, the post events do not tend to work out well for stocks. They tend to build in and then get sold off. Buy the rumor, sell the news is almost always the case with, chip events and that type of stuff. So I personally, if I was in that situation, I'd be taking a lot of profits. But in the end, it's his decision.
Yeah, don't let that $25,000 you need to make, quote unquote, need in quotes, drive your decision on this. You're up $5,000, probably more now since you wrote into us on Friday here. Was it Jeremy? So yeah, I think take at least some of that off the table so you can live to fight another day. I'm not sure what event you're referring to because the earnings already happened. The earnings were on the 19th, so maybe there's another event. He says leading into the event, so I'm not sure. If you wanted earnings, you bought calls pretty long dated. You bought them expiring this week, so that's interesting. Your frame of reference there. But yeah, I think we're both in agreement here that maybe take that bad boy off. Let's squeeze one more in here. Jay, 4340. That name sounds familiar. He's our resident food guy. He sent in suggestions for food about Philly cheesesteaks, about how the meatball should be the brisket. What's he got on today? So it's about time I run into the show about something other than food. Well, there you go. Wasn't it just a few weeks ago you were talking about someone selling the 3,500 calls in Tesla and how ridiculous that was? Look at the 3,500 calls now expiring on the 28th. They included a screen grab here. I think this is looks like from TOSAW. And yeah, he says now those calls are just part of the chain. You're right. That is weird just to see those calls listed straight up as a regular option, pun intended, out there right now. He says they were trading 60 cents with a week to go. 8 standard deviation out of the money. Keep up the great show. Always enjoy it. Yeah, you're right there, Jay. That is kind of weird to see the Tesla 3500s just kind of lumped in there with everything else. Speaking of 3500, maybe that strike a little bit more apropos right now because just I think today, a team of analysts out of Wedbush are raising their bullish target to exactly that strike, 3,500. This analyst, Dan Ives, says, quote, pent-up demand in the China EV space for Model 3s and the recent price cuts are creating a perfect storm of demand for Tesla. They say they believe the Chinese growth story is worth at least $400 per share for Tesla, along with upgrades to their Giga 3 factory. Tesla could have $35 plus of earnings power by 2025-2026 versus our previous estimate about $10 lower. Thus, we are now increasing our bull case target to 3,500 versus our prior price target of 2,500 to reflect this dynamic. I do love this little caveat, though. They still maintain a neutral rating of the company. This is why I say we take a dim view of analysts all the time. It's crap like this. You know, our bullish price target is 3,500. They say this nonsense to get ink, to get coverage. So someplace, I think this might have been Market Watch, runs with this. They get all kinds of, we're talking about it here on this show. But meanwhile, they're still neutral, really, on the stock. So this is just the kind of nonsense that analysts throw out there to get some ink, to get some traction. And it sounds like this guy is doing it. And hey, it worked for him. More power to him. But just this kind of stuff drives me nuts. But yes, Jay, long story short, yes, it is kind of crazy to see those 3,500s just in the vernacular, just part of the conversation now in Tesla land. All those Jan par puts, the Jan 100 puts and 10 puts, how far in the distant rearview mirror they seem. As this show is rapidly heading into the rearview mirror, we head into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right. Welcome to Around the Block, the portion of the show where we tell you what we're watching until the next time we can gather here together on the program on Thursday. Mr. Uncle Mike, we shall start with you, sir. What are your thoughts on what you're watching for the rest of this week until Thursday, sir?
I would just say to see if we can continue to have new all-time highs. And I'm actually watching pharmaceutical and biotech. I think that there's a lot of reason to believe that could be maybe the next tech in some ways, and that it's kind of like if it produces drugs, then buy it. Kind of like if it was a tech company, buy it. But I think that when we do have more drugs that will help COVID, it'll definitely be a good thing, of course, and I think that'll help both those two sectors.
Speaking of strong sectors, I was reading this morning that the people who make mace can't make enough of it. They have to add more shifts to their companies. They can't sell enough mace, a.k.a. pepper spray. That's kind of the world we're living in. Mr. Meatball, same question for you, sir. What are you watching for the rest of this week until Thursday?
Yeah, I'm watching these mega caps. I'm really interested in what Apple's going to do into its split, what Tesla's going to do into its split, and how they're going to operate over the next week. I think this is going to be if we're at that blowout the top moment for Apple and Tesla, which maybe we're getting close to, it's going to be this week before split, and then I'll be kind of interested whether there's some bag holders on Apple and Tesla post split. Just anecdotally thinking to myself, a lot of stocks don't, more recently have gotten sold after they've reverse split. So I think that's going to be one thing that I'm keeping an eye on.
Well said, sir. That's the blowout in Tesla. How could it possibly blow out top? The guy's talking 3,500. We're nowhere near the top. Unfortunately, we are near the end of this show, listeners. That music means we've come to the conclusion of at least this journey through the world of options. But if you need more in your ear holes, don't worry. We got you covered. Be back in exactly an hour to talk all things, lighten it up on the crypto derivative side of the fence. Got a great guest joining me to help me do just that. In between, we'll pump some fun stuff into the live chat. Listen to the live show. Get some education, some analysis, some all sorts of fun stuff. Be back in exactly an hour to talk all things crypto. But before we go, let's go back around the horn. Let's start with the unclest of Mike's. Mr. Uncle Mike, sir, if I, too, am an elderly couple and I want to call you up to talk about how to divest of my holdings, where should I go? What should I do, sir?
stcharleswealth.com for more information. Feel free to give me a call directly or send me an email. I would love to have a conversation with anyone. I'm a financial advisor who tries to prepare for those types of situations.
Give him a call, listeners. He's a fun guy just to chat with. Even if you don't, you just call him up. Say, hey, how you doing? What are your thoughts on college football? I guarantee you, he'll talk to you for a while about that. Maybe he'll get you a Skippy's Euros and Lemonade. Find out for yourselves. stcharleswealth.com is the place to go. And Mr. Meatball, I know you don't have any any Skippy's Euros and Lemonade, but maybe they can call you up and talk some fun 80s references. If they would like to do so, where should they go? What should they do, sir?
Yeah, go to optionpit.com and make sure you're reading, sign up for our mail list. We put out great content every day. So make sure you're reading our blog, you're following me on Twitter, and you're catching up on Facebook, and you're getting our emails. That's the way to learn and become a better trader.
There you go. And your journey begins. Optionpit.com, of course. Check it out. Kick the tires and light the fires. And on behalf of the greasiest of meatballs and the unclest of Mike's, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for asking questions, food-related and otherwise, for listening live, all the fun stuff that you do. Keep it coming. We'll be back in a little while for the crypto rundown. Back again tomorrow. Going to bring the folks from SEBO on. Finally got them back after all the crazy delays with the hurricanes. Talk about all these mini VIX futures everyone's all excited about or up in arms about. Talk about that tomorrow. Back on Wednesday for OPR, some boot camp, and, of course, some advisors options. So a lot of fun stuff coming up this week. And then back again on Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.